Section B of Summer 2012 Unit 1 exam was all about bakery. Anna Button has Button's Bakery. She gave up her job in a hospital and now she is a baker. She makes cupcakes and wedding cakes and all that type of thing. And it's saying that she is looking to expand, try out some new products, but she needs a £2,000 electric fan oven to increase her capacity. But she has been lucky because she's recently in Vogue magazine, so that's a good bit of advertising for her. So one of her main customer bases is weddings, and then they provide you with this information here. Marriages in the UK, as you can see, the graph is showing the amount of people getting married, either all marriages, first marriages, or remarriages, is generally kind of falling in general, or at least staying quite low. So that's not obviously a good sign for her. Right, moving on to the questions. Explain 2 factors that could affect demand for her cakes. Well, there's loads that you could do. So just 2 factors that affect demand. Start with your definition. Demand is the amount of goods or services that consumers are willing to buy at any given price. One factor that could affect demand for the cakes is that Anna was recently in Vogue magazine. This would give her free publicity. The publicity may encourage consumers to buy her products. So that would cause demand to go up. Another reason why demand might go up is because it says in the case study that she likes to offer a very personal service in which she gets to know all of her customers and their families as well if they're getting married. This kind of unique service or personal service may encourage demand, and also would be good advertising, as it would be word of mouth. You know, customers would like that type of thing, and then they might tell other people, which would cause demand to go up as well. Third one could be that it says in the case study, she uses organic products, very high quality products in her cakes. This may encourage consumers to use her products more because she is using the best quality products compared to her competitors. So any of those really, remember, you've just got to choose a point, link it to the case study. No need to evaluate here, it's just an explain question. That's 6 marks there. Question 10. With reference to the case study, again, explain one motive which has contributed to Anna's success. And it explicitly says there, with reference to the case study. So if you go to the case study, in the first sentence, it says that she wants to be more creative. That's why she left her job in the hospital. So one motive for an entrepreneur is creativity. Get your mark for defining. Entrepreneurial motives are reasons why an entrepreneur wants to run their own business. One may be creativity. Anna wants to be more creative and so runs her own business so she can use her creativity to make various types of cakes. That's all you need to say. Question 11, assess. So now we do have to evaluate. Assess whether or not Anna should use a bank overdraft to help her to finance new product development. Right, here's the thing with this question. You've got to think carefully about this. When I first read this question, when it said to finance new product development, straight away I thought of the case study saying she wanted to buy a new oven. It doesn't specifically state that new product development means just an oven. The oven is part of it, but also with product development, as in, trying out new cakes, trying out new recipes, she's going to have to buy the raw materials as well. So the cooking based products that she's going to need to use to make the cakes. So your answer is this. You start by defining bank overdraft. A bank overdraft is when the bank allows a business to use money that they do not currently have in their bank account. So when their bank account hits 0, they can still spend money. You'd say bank overdraft is a short-term form of finance. So it might be useful to her if she is buying raw materials such as cooking items, like food items, to use in her product development. A bank overdraft may be worthwhile for that because it's not going to be that expensive, maybe a few £100s for that. However, she also needs to buy a new oven. It would not be appropriate for her to buy a new oven because that would cost £2,000. And an overdraft has very high interest. So it's better if she's going to buy a new oven and she needs to raise £2,000, she should maybe get a bank loan. That's more of a medium or long-term type of loan. The interest is a lot lower on a bank loan than it is an overdraft, so it's much more manageable to her if she was in debt for a long period of time. So that's your answer. It's that, yes, it's fine if she just wants to use it to buy a few raw materials, but don't use an overdraft to buy something expensive like an oven, because you'll end up paying it back for over a long period of time and have a massive amount of interest to pay back. So that's the answer on that one. That's your 8 marks. You've given 2 sides of the argument. Evaluate the likely effect of inflation on her bakery. So definitely got to evaluate here. Start with the definition of inflation. Inflation is a general rise in the cost of goods and services within an economy. If everything gets more expensive within the economy, that means the raw materials that she has to buy for her baking company is going to go up. If the cost of raw materials goes up, what happens? She will have to sell, there will be less supply, but she will be selling everything at a higher price. So she'll have to increase her selling price because her costs have gone up as well. What's the outcome of that? This may cause demand to go down because she'll be consumers may be put off by her increased prices. However, evaluation point. She sells high quality cakes, therefore her products are luxury items. It may therefore mean that consumers would still be willing to pay slightly higher prices because they are luxury products that maybe set her apart from her competitors. It depends on the amount of other companies within the market who are also selling similar quality products. If she is the only one who is selling those high quality luxury cakes, then she may still find that her demand is still high, even if she has to increase her price because of inflation. You could also look at inflation from the point of view of her customers. If inflation increased, that would mean consumers in general have less disposable income, which would mean that then demand for luxury products such as her luxury cakes would go down. Evaluation point, however, is that she makes a whole range of different cakes. It says she makes cakes from £1.50 all the way up to sort of hundreds of pounds. So the evaluation point is, although she may find that consumers are less willing to spend money on the expensive side of things, they might be more willing to buy the cheaper products as well. So she may not be as affected overall by inflation. Also, another good evaluation point you could say is that it just says evaluate the likely effect of inflation. It depends on what the level of inflation is. If inflation has only gone up by 0.5%, it may not have a big effect, whereas if it went up by 5%, then that would have a huge effect. So you can always use that as evaluation for inflation. It depends by how much it goes up by. Final question. One of those questions where they split it into 2 parts, so 13A, 13B. We've got to evaluate for both of them. Even though it's only 6 marks, it does specifically say evaluate, and you're going to get at least half the marks for the evaluation, so you've got to do it properly. Evaluate the likely value of the following to the bakery. Market mapping. Right, start with your definition. Market mapping is when a business plots all of its competitors on a graph based on 2 different points. So 2 different equations or 2 different variables, for example, price and quality. So if she was to plot the market for cakes on a market map, she could see where there are gaps in the market. She could then sell products to fill those gaps in the market, and may find that there is an increase in demand for her products because of this. Evaluation point, however, you have to be careful with market mapping, because even if there is a gap in the market currently, there may not be any demand for it. So there may not be demand for for the cakes that are not being sold. Therefore, she would be wasting her money making cakes that she would not sell, which would mean that she would be losing revenue and her costs would be going up. So ultimately that would cause her profit to go down. So basically with market mapping, you can always evaluate by saying, even though it can tell you where there's gaps in the market, doesn't mean there's actually any demand for those gaps in the market. And then finally, 13b, another 6 marker you've got to evaluate. Break-even analysis. So why would that be useful? Well, start with your definition. Break-even analysis shows a business how many sales they have to have in order to cover all of their costs, but at the same time have zero profit. So how many sales do you have to have in order to cover all your costs but have zero profit? Any sales you have above the break-even point would mean that you're making profit. So if she was to calculate her break-even analysis, she could see how many cakes she would need to sell before her business was profitable. This is important as it helps her to plan for the future. It gives her an aim to focus on when running her business. She knows what the level of sales should be before she can start making a profit. Evaluation of break-even is as follows. 1, because she sells so many different types of product, it makes break-even more difficult to do. Break-even works if you've only got one type of product. It's a lot more difficult to actually carry out if you sell multiple products. So that's one evaluation point. Secondly, break-even is just an assumption. It's something you do before it actually happens, so it's a prediction. Therefore, break-even assumes that you will sell all of your products. In reality, this may not be the case because there is a large level of different businesses within the cake making industry. She has a lot of competitors, so she may not have the level of sales that she thinks she is going to. So break even can be misleading because it assumes that you will sell all of your products when in reality you actually may not. And that brings us to the end of section 2. And remember, when you get to the end of the paper, you should have a few minutes left. You should look over your answers and go back and finish off any of the section 1 that you did not finish.